It's the first week of January 2026. Margaret, 72 years old, sits at her kitchen table. She has been waiting for this morning for months. The news said her Social Security check would go up. A 2.8% raise, about $56 more every month. She had already planned what to do with it. A little extra for groceries, a small cushion for her electric bill, maybe finally the new pair of glasses she has been putting off. She opens her bank app. Her hands are shaking just a little. The deposit hits. But it's not $56 more. It's only about $38. She stares at the screen. She rubs her eyes and looks again. Where did the rest of her raise go? Margaret didn't lose her money to a scam. She didn't miss a letter in the mail. Her benefit was not suspended. Something quieter happened. Something the government did not put on the front page. Medicare quietly reached into her Social Security raise and took back nearly 1/3 of it before she ever saw a single dollar. And if you are receiving Social Security right now, the same thing is very likely happening to you. Hello, I am Faria. I am a senior policy analyst, and I help retirees like you understand the rules that quietly affect your money, your benefits, and your peace of mind. Today, I am going to walk you through exactly what happened to your 2026 raise. I will show you the official numbers from the Social Security Administration. I will show you what Medicare is now charging. And I will explain in plain English the hidden rule that decides whether you are protected or whether you have to absorb the full hit. Everything I share today comes from official sources: Social Security, Medicare, AARP, the Kaiser Family Foundation. No rumors, no scare tactics, just the facts. And please, stay with me until the end. There is one mistake many seniors are making right now, especially those who had a good year of income back in 2024 that could be costing them thousands of extra dollars every single year. I will show you exactly how to fix it. Let me tell you about Robert. Robert is 67 years old. He retired last year from a job he held for almost 35 years. He is a careful man. He reads the news. He keeps a folder for every important letter. He even has a little notebook where he writes down his Social Security deposit amounts every month. When he heard about the 2.8% COLA back in October of 2025, Robert did the math on his own kitchen table. His benefit was $2,200 a month. 2.8% of that was about $61. So in January, he expected his check to go up by around $61. January came. Robert opened his account. The increase was only about $43. He thought it was a bank error. He called Social Security. He waited on hold for almost 2 hours. The representative was kind. She explained that nothing was wrong with his account. His new Medicare Part B premium had simply gone up from $185 a month to $290 a month. That extra $17.90 was being deducted automatically before his deposit even arrived. Robert was stunned. But that was only the beginning of his problem. You see, Robert had sold his late mother's small house back in 2024 to settle her estate. It was a one-time event. The money was modest, but it pushed his income for that single tax year just over the IRMAA threshold. So in 2026, Robert was not paying the standard $202.90 premium. He was paying an income-related surcharge on top of it. Robert had no idea this was coming. He thought because his current income was low, he was safe. But Medicare looks at your tax return from 2 years ago, not your current income. And Robert never knew about a form called the SSA 44 that could have helped him because his income had dropped after retirement. That one missing form was costing him over $100 extra every single month, more than $200 a year. Quietly, silently, right out of his Social Security check. Robert did everything right. He saved, he planned, he budgeted. But one rule he didn't know about cost him real money. I don't want that to happen to you. So let's break down exactly what is going on. Let's start with what is real and confirmed. On October 24, 2025, the Social Security Administration officially announced the 2026 Cost of Living Adjustment. It is 2.8%. For the average retired worker, that means your monthly check goes from about $2,015 to $2,071. That is a raise of roughly $56 a month. The increase started with December 2025 benefits, paid out in January 2026. So far, so good. That part is exactly what was promised. But here is what was not on the front page of the news. On the very same day the COLA was announced, Medicare quietly confirmed something else. The 2026 standard Part B premium is now $202.90 per month. In 2025, it was $185. That is an increase of $17.90 every single month, almost a 10% jump in 1 year. And it doesn't stop there. The annual Part B deductible also went up. It is now $280 in 2026, compared to $250 in 2025. That is another increase of more than 10% before original Medicare even starts paying for your care. Now let's do the simple math together. The average retiree gets a $56 raise. Medicare takes back $17.90 of it. That means roughly 32% of your Social Security raise, almost 1/3, disappears before the deposit even hits your bank account. Your real raise is not 2.8%. For most retirees, it works out to about 1.9% in actual purchasing power. Now, you may have heard about a rule called Hold Harmless. This is the hidden rule I mentioned at the beginning of this video. And I need you to understand it carefully because most seniors are getting it wrong. The Hold Harmless provision is a federal protection written into the Social Security Act. It says your net Social Security check cannot go down from 1 year to the next just because Medicare premiums went up. That sounds like full protection, doesn't it? It is not. Here is the truth, and this comes directly from AARP and the Medicare Rights Center. The Hold Harmless rule only protects you from a check that actually goes down in dollar amount. It does not protect your COLA from being eaten up by the premium hike. In 2026, full Hold Harmless protection only kicks in for retirees whose monthly Social Security benefit is $630 or less. That's because $1,790 is exactly 2.8% of $630. If your benefit is higher than that, you absorb the full premium increase. And there are 4 groups of seniors who are not protected by Hold Harmless at all. Please listen carefully. If you are new to Medicare this year, you pay the full $202.90. If you are billed quarterly because Part B is not deducted from your Social Security check, you pay the full amount. If your income from your 2024 tax return crossed the IRMAA threshold, you pay even more. And if you are in a Medicare savings program, the rule works differently for you too. Let's talk about IRMAA for a moment because this is where Robert got hurt. IRMAA stands for Income-Related Monthly Adjustment Amount. In 2026, if you are single and your modified adjusted gross income on your 2024 tax return was above $109,000, or if you are married filing jointly and your income was above $218,000, you pay an extra surcharge on top of the standard premium. At the very top bracket, a single beneficiary can pay up to $689.90 a month for Part B alone. That is more than $8,200 a year per person, and the rule is based on your tax return from 2 years ago. So if you sold a home in 2024, did a Roth conversion, received an inheritance, or had any one-time income event, that single year can follow you into 2026. There is one more thing you need to know. The Hold Harmless rule only applies to standard Part B. It does not apply to Part D drug plans. It does not apply to Medicare Advantage. So even if your Part B is fully protected, your Part D premium can still go up, and that increase comes right out of your check too. I know this is a lot. Please take a breath. Because the good news is, there are real official actions you can take starting today. Here are the 3 steps every senior should take right now to protect their 2026 income. Step 1. Verify your real net deposit, not the headline number. Log in to your My Social Security account at ssa.gov. Look at your January 2026 benefit statement. Compare your gross COLA increase to what actually landed in your bank account. The difference is what Medicare took. Once you see the real number, you will know exactly where you stand. If the math looks wrong, call Social Security at 1-800-772-1213 or visit your local field office. Do not guess, verify. Step 2. If you had a life-changing event, file Form SSA 44 immediately. This is the form Robert never filed. If you stopped working, retired, lost a pension, got divorced, lost a spouse, or had any qualifying life event after the 2024 tax year, you have the legal right to ask Social Security to reduce or remove your IRMAA surcharge. The form is called the SSA 44, Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. You can download it directly from ssa.gov, fill it out, attach proof of the event, and submit it. This single form has saved retirees thousands of dollars a year. If your IRMAA was based on wrong or outdated income information, you also have the right to file a request for reconsideration. That is your formal appeal. Step 3. Use open enrollment and check for assistance programs. Every year, from October 15 to December 7, you have the legal right to review and change your Medicare Advantage plan or your Part D drug plan. Use the Plan Finder tool on Medicare.gov. Costs change every year. The plan that was best for you in 2024 may not be best for you in 2026. And please, if your income is limited, check your eligibility for 2 important programs. The first is the Medicare Savings Programs, also called QMB, SLMB, and QI, which are run by your state and can actually pay your Part B premium for you. The second is Extra Help, also called the Low Income Subsidy, which helps cover Part D drug costs. Both programs are listed on Medicare.gov and SSA.gov. Many seniors who qualify never apply, simply because they do not know these programs exist. These 3 steps are not complicated, but they require you to act. The government will not call you to remind you. The bank will not send you a warning. The protection only works if you use it. Before you go, I want to say one important thing. Rules like this change every year. The COLA changes, the Part B premium changes, the IRMAA brackets shift, new forms are added, old protections expire. And the truth is, YouTube notifications are not always reliable. Sometimes videos like this one don't even show up in your feed when you need them most. That is exactly why we built something special for seniors like you. Click the link in the description below this video and join the DIO Global Senior Alerts Official WhatsApp channel. Wow. It is completely free. When you join, you will receive your free copy of the Senior Benefits Protection Guide, a simple printable booklet that walks you through Social Security, Medicare, IRMAA, pension rules, banking protections, insurance claim tips, and travel rules for seniors, all in plain English. You will also get real-time alerts every time something important changes. New COLA announcements, Medicare premium updates, IRS pension rule changes, bank rule changes, TSA travel rule updates, straight to your phone, no spam, no noise, just the facts you need to protect your money and your benefits. If this video helped you understand the truth about your 2026 raise, please give it a thumbs up. It helps us reach other seniors who are sitting at home right now wondering where their money went. And share it with a friend, a sibling, a neighbor, or anyone you know who is on Social Security. They deserve to know this too. I am Faria. Thank you for trusting me with your time today. Take care of yourself. Check your statements. File your forms. And remember, the rules are written to protect you, but only if you know how to use them. I will see you in the next one. Stay safe and stay informed.